Oh boy, ladies and gentlemen, welcome back to the channel. At the time of recording this video, AMC stock is up more than 7% and things are getting a little bit crazy. The stock is at $4.02 per share. We're going to let you know what we can expect for tomorrow or what potentially could happen if AMC stock stays above $4 per share. And let me just tell you right now, it could get crazy and it could get crazy quickly, crazier than a 3-year-old crying all day and throwing a temper tantrum. Yeah, that's been all day. I don't even know how many tears does a kid have. It's kind of crazy. But neither here or there. That's not going to help you make money, but this potentially could. Let's get into it, guys. So first things first, AMC stock is ripping. No obvious reason, no obvious news. There is something that is obvious. If you have been following these videos, if you have been a viewer of this channel for years now, then you know full well what's going on. Everyone was too bearish. Well, now it's not such a terrible situation. Obviously, the reverse split, the situation that's going to be happening on August 24th, not necessarily great, but the 35% drop we've seen was a bit of an over-exaggeration. Short sellers piled into short positions, and they were caught off sides over the past couple of days. AMC stock has rallied 8.5%, and then 2%, and now today about around 7%. And now you're back above $4 per share, a major level as far as the option activity as well. This could actually fuel a bit of a gamma squeeze coming tomorrow also that you need to know about. So long story short, what's happening? Everyone was too negative. The 35% drop was basically pricing in dilution. And AMC has $600 odd million. They don't have to dilute shareholders right away. And that's odds are not what's going to happen, at least right away. Obviously, at some point down the line, we're obviously going to get dilution, but in the very near term, probably not. That means a little bit of an overreaction. So we're seeing that reaction back normalizing to the upside. And you're actually somewhat filling the gap that you've seen back here to the lowest point. And what we've seen is almost like a credence to the markets. All gaps must be filled. That's kind of what we've seen in 2023 so far. So that's the current situation of what is kind of happening in a nutshell. Now, what you're also potentially seeing is a little bit less of some of that outright illegal activity. That is a possibility. Now, it's also a possibility that some of the FTDs being closed out of could also be very positive. Now, let's take a look at some of this option activity because, boy, is it negative. And as AMC stock is going higher, the option activity is getting more aggressive, which shows you something crazy is actually happening here. Because with this kind of option activity, you would have expected AMC stock to be down in the dirt, literally getting buried alive today. What you've seen, 93 hedge fund and institutional orders worth $68.5 million with a positive order percent of, you guessed it, 0%. Now, today's option activity is much stronger than yesterday's option activity. And this is what I find interesting. Now, as you're seeing hedge funds and institutions not buying any bullish exposure pretty much, you are getting retail investors that are picking up the slack in the options. The volume for this option expiration that expires Friday is 48.5% calls today. Volume is 51.5% put. So if you were to take out the hedge fund and institutional very bearish trades, then you would see actually a lot of bullish option activity from retail investors, from a select few hedge fund and institutional investors. But by and large, a lot of your bearish option activity is from your hedge funds and institutions. Now, there could be something coming. There could be some form of news. That is always a possibility. But what we've seen today is the sell-off has gotten more extreme in the market. S&P, just take a look at the chart. I mean, S&P is now down 0.5%. And AMC stock is basically inversing that. As the sell-off is getting worse in the markets, the rally for AMC just is getting better and better, which is kind of interesting, to say the least. AMC hit a high of $4.05. Now you're trading at $3.05. and 98.5 cents. So we're right there at that $4 level. That's very important. Obviously, hedge funds, institutions, they're going to do whatever the hell they can to try to keep the stock down at depressed levels. Does that mean that's going to happen? I don't know. It's a possibility. Now, $4 per share is very important as far as options are concerned, because what's going on right now is, or what has been going on, is you have seen the stock fall quite a bit. You've seen a lot of puts go into the money, and that is a lot of artificial shorting activity. That's a lot of synthetic shorts, as a lot of us would call them, from the market makers. These are shorts that don't get picked up in your exchange reported short interest. It's not like a legal short interest where it's calculated. It's very fluid. So it moves based off of options that go in and out of the money based off of market maker hedging. Now, if you incorporate the options that are in the money, even for the $4 strike alone at 207,000, that is adding quite a bit of shorting pressure on AMC stock, or at least it has over the past couple of days. If AMC gets above $4 per share and stays above $4 per share, then you rapidly start to see a lot of these puts go out of the money and a lot of buying pressure from market makers as they have to get rid of some of those shorts that they have on for the $4 put. Now, typically, just one certain price is not that important. It doesn't move the broader needle for AMC. But when your option activity is this aggressive, it can be a very big deal. And that's exactly what you could see coming tomorrow if this bullishness does remain intact for the stock overnight and throughout the last half an hour or so of trading today. And again, as the sell-off is getting worse, AMC is rising. It's very much kind of discorrelation here, or inversion. Now, on one hand, you could also say that the market's falling, the bonds falling. That's putting pressure on hedge funds and institutions on some of their short positions that are not working for them. Over the past 3 days, those AMC short positions have not worked for you. And a lot of these shorts got into these positions during the 35% drop that we've seen in AMC. You've seen an explosion of shorts taking on short positions after AMC dropped 35%. That just doesn't make a whole lot of sense, and that is just very much stupid, right? That shouldn't be something that's happening, and it is happening. So that, I think, is also something to pay attention to keep in mind that this can be pressure on hedge funds and institutions, especially when cost to borrow fees are this high. Let's take a look at the cost to borrow fees and where they are currently at. So 1,060% is your cost to borrow max. Cost to borrow average is 978.25%. Cost to borrow minimum is sitting at 8.6%. The last real reading we had was about 808.5%. Interactive Brokers has cost to borrow fees of 879%. Last we knew, there was about 0 shares available to be traded. AMC stock is still on the threshold securities list, and the live short interest of free float is sitting at 28.33%, 146.27 million shares that are currently sold short. And again, if we just try to find some news here, there is nothing. There's nothing hitting the news wires. There's nothing going on. This rally is simply based off of what is being said in this video. It has to do with the option activity. It has to do with the pressure that you're seeing currently on institutions and hedge funds, especially as the bonds fall as well. I think a lot of people fail to remember that the bond market is 5 to 10 times larger than the stock market, just depending on what time in history you're looking at. So when the bonds react, that is very bad and puts a lot of pressure on hedge funds and institutions in their long positions. Not to mention when AMC, if you're short in that, if you're a hedge fund and institution, that's like pulling you on both sides. That's not an ideal situation that you want to be in. Now, short score is sitting at 93. You have $547.38 million worth of short positions currently in AMC, 28.27% estimated short interest of free float. Free float out on loan at 40.68%, shares out on loan 210.02 million, days to cover 7.56, 304% cost to borrow over the trailing 3 months, and 84% utilization. So some very, very extreme numbers that you continue to see. Now, if we go ahead and pull up AMC's FTD numbers as well, and go ahead and look at it, you've actually been going higher on the FTD numbers ever since this reverse split did happen. So a little bit of those FTDs, a little bit more of those FTDs maybe, are getting put in the spotlight, and that could ultimately be a problem for the hedge funds and institutions. Now, today is August 17th, and you have 12.7 million FTDs that did come due today. This is cumulative, so this is running. So some of these could be getting covered on or getting closed out of. And this has a very anti-dilutive effect, right? These FTDs shouldn't be out there. They're diluting the stock, and there could be more of these than we actually know about. Well, when these do get covered and basically bought back, that is very anti-dilutive. That makes it the flow actually contract, kind of like a buyback from a company. When a company's buying back shares, it tends to be a pretty good time to own the company, to own the stock. And that's kind of what is happening with AMC with the FTD numbers. Now, the FTD numbers don't go away anytime soon, and over the next couple of weeks, it wouldn't surprise me if the FTD numbers even go higher again. Now, something else that we need to talk about as well is the bond yield. So rates are jumping today. 5 basis points on the 10-year Treasury. You are now at the highest point that you have been at in this whole entire cycle. Now, October and November is the last time that you were this high with the bond yields. And what happened last time in October and November of 2022? Well, stocks hit their lows. This was following Jackson Hole in August of 2022, where the Fed was very aggressive. Fed Jerome Powell basically outlined that he will not stop raising rates until inflation comes down, that they will get the job done. What do you have coming up next week? Jackson Hole Economic Symposium. And that's going to be, I believe, on August 24th through August 26th. And you're going to hear from Fed Jerome Powell. He's probably not going to be the most dovish person in the world. And then you also have NVIDIA earnings that are coming next week on August 23rd. Those are 2 major catalysts for the markets that could be quite worrisome for investors. And this is, again, helping to create more uncertainty and create a bigger problem for hedge funds and institutions, especially, again, as AMC goes higher and shorts are massively short and the rest of their assets are basically falling in value. That's not good. Now, on the day, it looks like short interest has increased 0.21%. And you do have about 303,000 shares that are being sold short here today, guys. So that's kind of what I have for you as far as the option activity and what this could actually do for AMC stock tomorrow if this bullishness does continue, and it looks like it probably is going to. Well, if the $4 puts stay out the money by tomorrow, well, that likely means you could see some pretty massive upside from here. Just based off the 207,000. Let's do some simple math here. All right. Pull up the calculator. So 207,000 times 100, because every option is worth 100 shares. That's 20.7 million shares potentially that would need to be bought by market makers. That would be massive. The total volume you're seeing so far on the day is 51 million, right? Volume has been elevated recently, but if you compare this to historical volumes that we've seen with AMC, besides just with this court proceeding, you were in the range of, 20 to 25 million shares trading hands every single day. Some days were less than that. Some days were 14, 15 million. So this could be a very big deal and could really send AMC higher. And again, the overreaction is now met with the reasonable reaction. And I think it's pretty clear that AMC is not going to raise capital right away, that they don't need to. And that if you're a short in AMC, you are getting screwed on the cost of borrow fees, on the fact that shorts took out short positions after AMC dropped 35%. What do they expect to happen? Do they expect AMC to keep falling? Another 20% the next day, another 20%. No, this was actually good for AMC. It allowed them to open up the door to raise capital at some point down the line. Not the next second chance they get to, they're going to nuke the stock. That's not what is expected to happen. And that's what the markets were pricing in. So that is going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.